Hello, it's Friday the 11th. I'm FxPlew and this is the market brief. So Kwasi Kwarteng's been on. He piped up after what's being called a self-imposed exile. Personally, I call it hiding in shame after crashing the economy and getting fired. But we're not here to split hairs. Either way, he came out punching. He said that he warned Truss that she was moving too fast with her reforms. Shots were fired. However, he still believes in the principles of what they tried. And he's even warned Sunak about getting cast in the role of a tax increasing Prime Minister. I mean, Christ alive, the guy's on a different planet. It sounds like it's only the speed of delivery that is his real regret. Obviously, this led to him being a scapegoat for Truss, but he'd probably do it all over again, given his time once more. Put those scissors down, Kwasi, you can't be trusted. And as it happens, Andrew Bailey had a little pop at Kwarteng's inexperience recently. He was explaining to an audience how much harder it is to regain market confidence than it is to lose it in the first place. The point being that even a 5-year-old with a blunt pair of scissors could probably crash a market. Anyway, away from the character assassination, we had Q3 GDP out this morning, and that has marked the beginning of a recession. Forecasts were for 0.5% contraction following 0.2% of negative growth in Q2, but the data confirmed only 0.2% of contraction. But either way, that's 2 quarters of negative growth, and that's a recession. Dem's the rules. Despite that though, sterling touched 117.15 yesterday. That was helped higher by the US midterms and a rise in risk appetite. We open around 117 against the dollar, about 114.55 against the euro, and euro dollar is up at 102.15 this morning. Now over in the US, inflation is beginning to fall. While some individual components continue to rise, headline inflation fell to 7.7% in October. That's down from 8.2% in September. And assuming the Fed continues to raise interest rates further into restrictive territory, the headline inflation may well start to fall faster from here. Although Powell has remained laser focused on an aggressive fight against inflation, we've had 4 consecutive 75 basis point rate hikes now, so the time may be coming where he needs to calm down a bit. The dollar sold off as the midterm results trickled through. Risk appetite rose and the dollar index fell to a low of about 107.70 on the day yesterday. And that's it from me. I hope you all have a great weekend. But ahead of that, do remember to get your poppies out for the lads. The 11th hour of the 11th month, we will remember them.